Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance all together. I am your host for the evening, Zenith, and I'm joined by my excellent compatriot Tracker. How you doing, buddy?
Doing well, man. I was kind of upset to miss last week, so I'm looking forward to us getting it going. I know we were supposed to be on you last night, so I'm glad we're at least getting it on tonight because it's been too long. A lot of things happening, a lot of interesting things we're going to dive into tonight. So looking forward as always, jumping into it, man.
Yeah,
Hope everybody's had that good 3-day weekend. Hopefully everybody was able to enjoy that. Take a little R&R.
There you go. The 3-day weekend, very much appreciated, even though we're 20 days into the new year now, so we are technically coming off Christmas break, but at the same time, I don't know about you guys, but January has felt extra hectic. I don't know if it's just like the post-holiday depression coming back to work, or if it's the start of the year and everyone's trying to hit the ground running. A little bit of both for me, but yeah, happy to have it. And happy to see all of our friends out there. Moonpill Rational Optics, he's saying he's a bit early. I said, yes, sir, but we are also a bit late today. So we appreciate you guys rolling with the punches. And we figured, hey, enjoy your 3-day weekend. We'll stream on Tuesday. We'll still be here to talk about what's going on. And we actually have a good bit of action that happened in the last 24 hours to help, make the show more interesting. So we do have a few different topics for tonight. We may have an answer to a question I posed over the last couple streams, which is theoretically, if the US did happen to seize Bitcoin during the whole Venezuela saga, what would they do with it? Well, the Treasury Secretary, Scott Bessent, actually gave that answer in an interview. So we're excited to see that they're actually trying to put it in the Treasury, and we'll show that clip. But on top of that, we also have another update on the Clarity Act. More details have come out about why all the major crypto companies have actually been pulling their support for the bill, and allegedly it's coming up for a remark and a vote in about a week time frame, which coincidentally is actually about the same time frame that we should be expecting a Federal Reserve meeting as well. And then lastly, we're going to kind of answer the big question going on right now, which is what the heck is going on with crypto? We see a lot of action in other markets, but crypto has been doing some odd things lately. We did have a recent cycle high of about $98,000, which is exciting to see. But at the same time, we did also drop back down to about 88,000 today. And it looks like that might be a local bottom, but time will tell on that one. Either way, we're going to be talking about all that and more tonight and trying to just make sense of everything going on. So with that said, sir, let's get the fun one going here first. Alrighty. Please let me know if you cannot hear the video. But come to us from Christine Lee. The policy of this government is to add seized Bitcoin to our digital asset reserve, from Scott Bessent himself. All right, let's see what he has to say.
They are our colleagues.
Can you give us an update this year in 2026, what America's strategy is for a Bitcoin strategic reserve? And given that the SDNY recently seized Bitcoin from developers working on a project called Tornado Cash, what does the administration think about that, contrary to Trump's executive order saying that Bitcoin should not be seized Bitcoin should not be sold?
So a lot of things to unpack there. I'm not going to talk about Bitcoin specifically. What I will talk about is the administration led by Treasury and our colleagues on both sides of the aisle in Congress passed historic legislation, the Genius Act for stablecoins. We are working on clarity legislation. And our goal, again, it is the president bringing digital assets and innovation onshore to the US. We want to be the best regulatory regime for digital assets and creativity to spark innovations. The previous administration almost created an extinction event for digital asset companies. We are bringing them back. I'm not going to comment on that litigation other than to say, if anything was seized, I believe it would have been seized from the founders, and the policy of this government is to add seized Bitcoin to our digital asset reserve after the damages are done. So the Bitcoin reserve, our view was first you have to stop selling, which we have done, and then we can add the assets in asset forfeitures.
All right, there you go. So anything coming in, will not be sold, according to Scott Bessent. But at the same time, that's not really written down policy at this point. It's more of just the direction that they're handling what's going on as it stands right now. But he also made a very good point there, which is that under the previous administration, the digital asset economy was definitely in a almost exiled state inside of the United States. It was hunted, it was persecuted. There were some pretty nefarious cases that either had just like negligence or just straight up malice with them. I'm specifically talking about the debt box case where they lied to judges and then doubled down on their lies to seize a bunch of assets from people who they claimed were harboring funds for international terrorists, but were actually just American citizens trying to use a crypto program with their own money. But yeah, there you go. We're not selling the Bitcoin, and it's a new leaf over here. Tracker, do you have any major takeaways from that one?
I got a lot. Actually, I was looking up something right now when you said that because people forgot. But think about it when the SEC was basically, like you said, it was on a witch hunt. Anything that was crypto related, they were going after and wanted to get their hands on it. Think about the banks. Remember the banks that were shut down, the two major banks in California that were led to a lot of the funding through those central exchanges and cryptos.
I want to say that was Signature Bank and Silicon Valley Bank.
Yes, it was those. They got shut down and then they were basically shopped up into the other banks that consumed them. So it was definitely witch hunt. CZ, I mean, the list goes on and on. I mean, it goes on and on. Sam Bankman-Fried, I mean, you could create a documentary on what transpired just in 2022 and 2023 alone. And people would be like, oh, this stuff's got to be made up. There's no way this stuff happened. Yeah, it's that extreme. Scott Bessent, just to give everybody some context, why is all these headlines coming out all of a sudden? So you got Trump out here talking about tariffs are going to stay in place. We're going to take over Greenland. You got Scott Bessent, talking about how now like you're saying, anything that's going to be confiscated, crypto related wise, is going to be basically funneled into this U.S. crypto treasury account. They're all in Davos, Switzerland. If you're not sure what Davos, Switzerland is, it happens right around now, this time of the year. This is one of the big world leaders, big professionals, basically people who have massive influence around the world meet in Davos, Switzerland to talk about many different key topics. I can go down those right now. I'm not going to steer away from the topic we're talking about, but we can talk about, but it's going on from January 19th to January 23rd. So expect a lot of big headlines coming out between now and the 20th. This is going to be a hot week. There's a lot of key stuff they're talking about. You want to know who runs the world and a lot of powerful people that pull strings and what's going on. Pay attention to what goes there. That'll give you shed some light on kind of where countries and different agendas might start to go. It's always good to see it. This year's theme is a spirit of dialogue, is what this year's theme is about. That's what they're calling it. So they got a lot of them. But to go back to it now, steering it back, the confiscation of the crypto reserve. So that's one piece of it, but you did touch on the fact that everyone's been pushing back on the Clarity Act and they want to go back to the drawing board and clear some things up. Keep in mind, Brian Armstrong, CEO of Coinbase, has been all over this one. He's been pushing back heavily against it. Zenith, I don't think you touched on, did you guys touch on it last week as far as like what's the main pieces that are kind of holding up? Or are we going to hold off on that for a minute before we get into that?
Let's hold off on that one. I got a segment for that guy.
All right, sure. So we'll wait on and get into the details there because there's a lot of good, interesting stuff there. But basically what's going on right now is you have the banks that are like we talk about it. First they'll laugh at you, then they're going to fight you, and then they try to basically partner or try to figure out how this is going to work with them and how they can get in. That's where we are right now. We're in the final phase. They laughed at crypto. They fought crypto with the SEC for many years. Now these big institutions, mainly the banks, have figured out how to leverage the technology and how to kind of get into it. If you an easy way to think about it is, think about when the iPad or iPods came out, when that disrupted the music industry. That changed how music distribution was going to change immediately. So the smart people got in with it, figured it out quickly so they could figure out how can I get ahead of this before it becomes a problem. The banks have been working on this for quite some time. This is a much, much larger, you're talking about the world finances. Yep. Around the entire world. You're talking about, and then it's even more complex. So you're not just talking about you know, if everybody got along, it would be pretty straightforward. They could agree on, okay, what would be the policy? What's the regulation? How are we going to do this? But everybody's got their own ideas. We've talked about on the show many months ago, or at least a month or two ago. We talked about how the BRICS have their idea, how they should do it. Now you got how the United States wants to do it with other players involved. So there is definitely a power struggle going on that's going to keep going on until, I mean, that's just the nature of mankind. Sorry. But it's interesting because so we talked about what happened in Venezuela, all that seized crypto. Everybody keeps talking about how much gold was confiscated and how much oil were there, and the drillers are going to come in and start really extracting that oil and all. Not a lot of people talked about how much Bitcoin was seized. There was a lot of Bitcoin that was seized. So it's going to be interesting. Will the U.S. come in and be like, yeah, we'll take it from here? Or is that going to get put into some type of an extension treasury of the U.S. somehow, do a partnership with Venezuela and let them keep it? I don't know. That's going to be an interesting one to see. Did they already come out on that one?
That one, we are still very much in speculation realm. We
Sure.
don't know if it was seized, but there is speculation, and it's a healthy chunk of change. If I remember correctly, it's about $600 billion worth of Bitcoin. And it's no small chunk of change. Because if you remember, back in the summer of 2024, Germany liquidated 50,000 Bitcoin that they were required to do procedurally by their own rules. And that was, you can point to that exact day on the chart when that happened. That was the low for the summer, and it was a pretty heavy low. I want to say it got all the way down to about $59,000 after we came up and we hit our new all-time high before the halving in March of about 74,000. And then, yeah, we did chop around sideways for pretty much from that March timeframe through about the election, because the election results came in, there was a massive pump, hit the new all-time high, then again. But yeah, stuff like that, where you start seeing this amount of crypto that could move, those are things that can legitimately make charts. You never know really when the top or the bottom on a chart is unless you make it yourself. And we're at the stage in the game where the markets are so large now, where the kind of people that have the ability to make those tops and bottoms are people on the scale of like a nation state, or people that have access to the wealth of a nation state. I'm thinking like Elon Musk, even the Satoshi wallets, if those things ever moved, that would definitely, you'd see it on the charts for sure. But when it comes to Venezuela, we don't know if the Bitcoin was seized. There's still a lot of stuff going on right now.
Yeah, I'm looking at it right here. Yes, U.S. authorities could seize these alleged reserves, potentially removing up to 3% of the Bitcoin circulating supply. 3%. That's quite a bit. That's nothing to scoff at. Yeah, you could absolutely move. Yeah, you could absolutely do that. So, yeah, just to kind of piggyback off that, the U.S. doesn't need to liquidate any crypto that they do confiscate. They have vast amounts. If anything, this is just hedging their bets to have the protection. I mean, that's just it. That's what it comes down to. And I think that's why you're having a chase to this. But to kind of go into another area I wanted to go into was, and we're going to connect these dots, guys. You know, we talked about how Venezuela, which everybody speculated, well, why did Venezuela? It was because of the reasons we beat it up. No, the number one reason why Venezuela, now there's probably many other reasons, but there's a lot I can ram off. Okay, it looks really good for this midterm election, right, that we're in right now. Dreams and hopes, everything will be promised to you. Everybody's going to promise you the hopes and dreams and everything right now. That's just how it goes during midterm elections in the United States. But you also have them, so it looked good from optics. Oh, we're shutting down, cartels, illegal activity, drug smuggling, illegals coming in, all this stuff that hits on people that care about those topics. You've satisfied them. And at the same time, you've also come in and shut down and essentially locked up a massive, 17% of the world's supply of oil, and the largest reserve in the entire world there. Now you've made all the oil companies very happy, because they're going to be more than happy to come in there and help them extract all that oil. That's the second partner you satisfied. Industrial war complex, check. All these things, whether you hate them or like them, it's irrelevant, but these are the things you're satisfying. The next thing that comes into play, though, is Venezuela was trading their crude in non-US petrodollars, which is the nickname for trading. All crude is supposed to be traded in US dollars. That was agreed upon a long time ago, but we're starting to see this across the BRICS. China and Russia were trading those in digital yen, is what was happening there. So agree. I mean, I'm not going to say that was the minimum reason why they didn't. Me personally, I kind of feel like that was probably it, because you can go back and look at what happened in the Middle East with Saddam Hussein. You can look at what happened to Gaddafi in Algeria. You look at when the crude oil was being traded in the rubies over in Russia. That was, there always seems to be legal, or not legal, but military action that takes place. Agree, disagree. But this is what happened. And now they're stepping in and shutting that down. What did that do? We talked about it on the show. That's going to piss off the BRICS and others that were affected by Venezuela getting shut down. That just cut off a supply of oil and be able to bypass the U.S. petrodollar. Well, they shut it down, so now they're upset. So what are they going to do? Well, the retaliation, you're seeing it now. Some of these countries are starting to dump U.S. treasuries, which is the U.S. debt. And that's in their retaliation saying, well, you want to play that? Then I'm not going to hold your debt anymore. So I'm going to start dumping it. And that's what you're seeing, some of the shakeup going around the world right now. And of course, with the headline news, with the United States talking about how they want to, take Greenland, whether, they purchase it or not. There's a lot of, there's a lot of strong arming going on right now. Yeah, that's a good way to put it. There's a lot of this going on right now. And like I said, why is this? Because they're in Davos. All the big players are in Davos. There's a lot of big, powerful people there. And you have probably most of the people from the IMF there, the BIS. You have all the big banks that are there. You have a lot of the powerful countries there, the G8's there. You name it, they're there, unless there's some type of big event that's blocking them somehow, like a personal problem for that matter, but they're there. Anybody is there, or has people that work for them that are there. I mean, it's just how it is. It's too big of it's like the World Convention on what the people of power care most about. And if we got some time, I'll rattle off the topics that they're going to be focusing on, but we can talk about that. But it is something to pay attention to kind of bring it full storm, because I know I've kind of gone around on all this, but I wanted to connect the dots, show you what has happened and why you're seeing all this come up. And of course, all of this adds uncertainty and concern. This is why you're getting a lot of shock in the market right now today, certainly. And I expect it to be a little bit rough here over this week specifically, because this is one of the big agendas and ideas start to come out. And you overlay that with the midterm elections right now in the United States, you got a cocktail. So that's kind of where we are.
It's quite the storm for sure. Gosh, when you're talking about midterms, I know it sounds crazy to think about, but yes, we are in the year of midterms, especially as we get closer to it. A lot of government functions are going to start slowing down. And by government functions, I just mean the legislators as they go re-campaigning and stuff. But it reminded me of the Jim Mora NFL clip where he's like, playoffs? You're talking about playoffs? The midterms? You're talking about midterms? It's January. No, that kind of thing. But yeah, to connect the dots back again, we are not done seeing the ramifications from what happened in Venezuela. You can try to slice that pie a bunch of different ways. You can take the easy route and be like, look, Maduro was kind of at the top of the capture list for a long time. Even under the Biden administration, he had a $25 million bounty on his head. And now Trump pretty much just did it himself. You can try to say that, okay, it was trying to secure U.S. dominance in the Western Hemisphere. You could argue that. Or you could also go to the route that we're looking at here from the financial standpoint, which is that there is a lot of financial incentive, not just directly for the U.S., but also competing on that global stage for the petrodollar, finance dominance, or currency dominance, all that kind of stuff. But the reason we brought up the clip is that this is kind of a follow-on to the clip that I showed last week, which is that Trump came out and said he learned from the Bitcoiners. You never sell your Bitcoin. And, well, now you have the Treasury Secretary pretty much saying the same thing. So it's definitely a bit of a shift, or hopefully it's the start of a trend, which is that the government is realizing that crypto is an asset and they want to hold it long-term, basically forever, and use it for some strategic purpose other than just trying to cash it out right now and just make a quick buck. Hopefully they can look at Germany and saw what happened when they did that and be like, wow, we missed out on a lot of money. But also, theoretically, these could be used as kind of like political chips at this point. It's getting to that size. But yeah, there you go.
It's the same thing. Well, just to go off what you said, Zena, just to go off what you said real quick, because it can be used as a political war tool, financial war tool, just like how everybody does a currency war. What I'm referring to that is a lot of countries will start, making their currency cheaper and cheaper while they make everybody else's more expensive. By them dumping the U.S. Treasuries, it's making the U.S. dollar kind of strengthen as well by that. And so you're basically starting to, it's a way to retaliate, not using any type of physically retaliation, but you're hitting them where it hurts, and that's at the wallet, and making their consumers in that country suffer. Just to add to it, connecting the dots. So this happened. Let's take one step back, and we talked about it last show. What did the administration say? Deem anything that was any of these cartels? They deemed them terrorist organizations. Any cartel is now a terrorist organization. And why does that matter? Because now they can use military force. They don't have to use just DEA, anything like that. They can come with military force. Like it or hate it. I'm not here to do that. I'm just laying out connecting the dots for you. So why is that becoming important? Well, there could be, who knows? Who knows what could happen now? You could go into Mexico. If you don't like how somebody's doing it, you could there's tons of cartels in there. You have a, how do I put it? You have sorry about that. You have probable cause essentially to go in now and do what you want. And that's the problem now. Now there's going to be ramifications of it, because you're going to have retaliation, just like the U.S. Treasury is getting dumped. But it gives them an out to kind of almost strong arm other countries. Like I said, agree with it or disagree with it, it's irrelevant. But that's why that was such an important piece that they put in there. And don't be, and not to get too much into this, I want to get back on the financial side that we more care about. But in the United States, they've been using military forces to go into cities to, quote unquote, take out illegals, deport them and stuff like that. So the military force isn't just going in other countries, it's going into actual cities in the United States, whether you agree with it or disagree with it. So that's starting to happen. These are all kind of new theories that have started to come around. So I'm just saying.
Yeah, it's a small point of clarification.
Yes.
The National Guard is operating inside of the United States as its purview. The military is greenlit to go after terrorist organizations, or what you'll probably hear these called are TCOs, or transnational criminal organizations, basically just cartels, because they're able to operate across borders and stuff like that. But yeah, look, I'm happy to see that we have not declared that we're going to go nation build in Venezuela now that we've done this. In fact, it seems like they've kind of just taken out one guy and turned over the regime to the other folks who are hopefully more friendly to the United States at this point. But at the same time, yeah, the economic ramifications are going to continue. And all the markets are connected at this point. They really are. They have different fundamentals between them, but they all share pretty much the same marketplace, because money is fungible. It can flow from one thing to the other. Granted, there's liquidity issues going between one thing and the other, but at the same time, like, it truly is a global marketplace of everything all tied together. Alrighty, sir. Tell you what, let's head on over to our next story here. So, update for you guys on the Clarity Act. For the folks that caught the stream last week, yes, we talked about this one and it got delayed. The delay is still in progress, but we've got a little more clarification on exactly what the issue is and why a lot of the big crypto companies are actually pulling back. Namely, Brian Armstrong, the CEO of Coinbase, is really leading the charge and being very vocal about this. So let's see what's going on with this one. So pretty much what's driving the controversy. First, a quick summary of how we got here. After reviewing the Senate banking draft text over the last 40 hours, Coinbase unfortunately can't support the bill as it is written. There are too many issues, including a de facto ban on tokenized equities, DeFi prohibitions, giving the government unlimited access to your financials, but more importantly, I think this is the one that they've really been highlighting the most, which is stablecoin rewards and yield-like features. How stablecoin rewards, more specifically yield limits, will be finessed. If yields are permitted at all is one of the most concrete issues, with banks arguing that the structure could accelerate deposit flight, while crypto firms argue restrictions are anti-competitive. So we are getting the side of the story really from Brian Armstrong, aka the crypto side of the house. The part of the story that you're not really seeing is all the lobbying that's been going on by bankers at this point. Pretty much the competition is that banks don't want the crypto exchanges to be able to pay yield to people who are holding stablecoins on their platforms. The reason being so is that guess who does a very similar thing? Well, that would be the banks, where you put your money in them and then they pay you interest on them. Granted, the interest that you get from a bank, especially in just like a checking or savings account, is nowhere near the yield that is currently being offered by the crypto exchanges. So the argument that they're making is that, look, the banking infrastructure is very vital and important to the economy and the nation at large. Therefore, any sort of competition or even threat could affect the banking industry. But that's kind of the point, which is that the whole point of crypto and DeFi in particular is that you're not tied to the banking system. You have access to a more stable or better fundamentally secured monetary source effectively. So this is a little bit of kind of protecting their own from the banks. And by that, a little bit, I mean a lot of it. So pretty much saying that they don't want other people in their space believing that people will actually take their money out of the banks and go put it into stablecoins and keep it with central exchanges. Now, Tracker and I have talked about this ad nauseum about why keeping money on a central exchange is not the greatest idea in the world. But at the same time, though, I can understand why the appeal is there. And especially if these things are becoming more secure and more regulated over time and larger so that they're more stable, then theoretically, the argument that this is a safer place to gain yield on stablecoins that you're not going to be using anyways because you're keeping it for a rainy day or something, or just straight up using it as kind of a bond almost. Yeah, that starts to grow, and that kind of scares the hell out of the banks. So, Tracker, what do you think? Is that the story, or is there any other angle to that one?
No, I mean you definitely nailed all the pieces. Just to elaborate on that though, so if they're what they're looking at, they keep throwing out the word 5%. Some places offer a little higher, but let's just say 5% yield on holding stable coins. Banks cannot compete with 5% at all. They don't even come close to that. What, half of a percent maybe at best? I don't think that high. So what their concern is, there's going to be a mass exodus from the banks. Well, yeah, exactly. Because that's exactly why. Because the banks are an outdated tool. Now, the banks are quickly learning these tools and these features, and they're trying to, like you said, control everything. They want to try to leverage the technology because they love this, and the tokenization aspect. I want to dive into that a little more because I'm still trying to find out like what's their hold up on tokenization, because the big push right now is banks themselves, JP Morgan and others, are already moving towards tokenization. So I'm not quite sure like what they're not liking about tokenization, like the details there. Like we're moving towards tokenization. That's just going to happen. Some people will call it CBDCs. I think you're going to call it crypto, whatever you want to call it, but they're moving toward tokenization. That's, I think, a formality at this point. Too many pieces have already been teed up. Too many big boys are involved. The big three, or two of the big three, have already gotten behind that. So it's coming. It's coming like a freight train. But the stable coin one is really bad for them because they can't. There's no way they can compete with that. So think about it. If you have a lot of money you're holding in it, you have this mass exodus. The banks, honestly, the scary part about it, if this really were to happen, and it's not going to because it won't get that far. But if you had a mass exodus of money from the banks don't even have that much money on hand. It would show that they don't even have that much money in the reserves to even pay back because they've triple and quadruple lent everything so many times over that it would take forever to unwind it. That's the bigger problem. Thank you to the repo market for that one. But so I'm saying you wouldn't be able to unwind this thing because the money's too stretched out everywhere. So that's one big problem. But the banks they do understand this. We've been talking about this forever, like you said. They laughed, then they fought, and now they're trying to figure out how to get acclimated into the system and how can they not give up their control, but at the same time, they can't just say, you know what, we're going to shut it down. We're not going to allow anybody to touch it. Well, I guarantee the BRICS are going to be all over this. They're certainly not good. They're going to certainly raise the power to use it. So you're going and you have people. So it's interesting. You have other little side notes to here. El Salvador, for the longest time, was one of the first countries to make it legal tender crypto, Bitcoin particularly, right? And who stepped in there and told them, you need to kind of calm down with this. And they got in line and they did so. The IMF came knocking on their door, International Monetary Fund, told them, you're going to get in line, you're going to stop doing some of these things, or we're going to cut your rating, your credit rating down to where good luck trying to get any type of funding. So anytime there's a rise here, you're seeing pockets that popping up. The good news is for the consumer, us, is now we're now starting to have choices.
Cut out there for
so that and DeFi, them having that on the fact that they have DeFi on there, DeFi is a big one because a lot of people are doing stuff on DeFi that completely bypasses everything. And then on top of that, when you have the central exchanges are trying to work out this whole Clarity Act with Brian Armstrong from Coinbase. So central exchanges are very, very similar to the financial institutions, monetary funds and other capital funds that work with the banks. So it all kind of makes sense that they're trying to work this out so it doesn't destroy their model. But DeFi doesn't care. It's just going to go off and do its own thing. So that's why it's a huge threat for the banks. This is why they want to try to get this locked down, because they know if they can get this locked down, there's a lot less people that are probably going to go into DeFi and they'll stay within the central exchanges.
Yeah, the banking industry is possibly one of the most entrenched and established businesses, sectors, whatever you want to call it, because banks have been around for millennia. And inside of the United States, they were very well protected. And you could even argue that they're organized into a bit of a cartel back when we created the Federal Reserve. I know it sounds a little tinfoil hat theory to be like, oh, the banks are fighting crypto, but like, no, legitimately, like if you just take a step back and be like, Party A has had a monopoly on a marketplace for over 100 years at the point. Party B has now invented a technology that can compete with it and can do better than they can. So yeah, Party A is threatened by competition from Party B, but in this case, Party A is just the banks and Party B is the crypto. So like, it's really not that conspiratorial. And if anything, you can actually see this stuff coming out to light here. At the same time, I got to say, like, banks are one of the most regulated industries, sectors, again, whatever you want to call it, because it is a marketplace, but not as much as you think. And it's largely due to the backing of the Federal Reserve and the US government at this point. So it's an interesting point in history where we're at right now, which is that the banks have largely been working hand in glove with the government for over 100 years at this point through the creation of the Federal Reserve and all the different regional boards over there. Now, the government, or at least the current administration in power, is actually championing crypto. So we're kind of almost getting two allies getting put up against each other by their same buddy, being the government at this point. So the fight is an interesting one because I'm curious to see how this goes. I have hope for crypto, but at the same time, I think you'd be a fool not to realize that crypto is the underdog in this story. And I really would like to see an underdog victory come out here and actually see some power to the people and see crypto be used. And we actually get one step closer to a more solid money supply, which honestly, if the Clarity Act was passed with the stablecoin yield, with not reducing the amount of tokenized equities and real world assets that they can promote and use and create, that would be the fulfillment of DeFi. Without those things, is it the end of DeFi? Absolutely not. It is not. Even if the bill was passed as it stands today, what would go into it is a lot of the Clarity structure, which is defining tokens, stablecoins. Stablecoins were largely defined in the Genius Act that passed last summer, but it gives a lot more specificity to what are digital assets, digital commodities, who's a broker, who's a dealer, what are the rules for you guys, how can you separate, how do you have to separate, how do you have to handle customer funds. All that kind of stuff is in the bill as it stands right now. The things that are not in there are stablecoin yield, tokenized equities, and tokenized real world assets, and then also a good bit of DeFi privacy and scope. So pretty much it's a lot of the classic DeFi stuff that is kind of getting kicked out right now. But at the same time, though, theoretically, if it did pass, I would still see it as a bit of a boon to the crypto industry. I think we would see good things happen, especially on the charts. But at the same time, though, it would not be the true fulfillment of DeFi, which that really is the battle right now. And to give the congressmen and the senators their due, they are elected officials, so they've done something right in their life, but they're not DeFi experts. And to be honest, I highly doubt that most of them really even understand some of the basics of blockchain technology or the kind of tenets of decentralized finance. So it's a bit of an uphill battle, but as it stands, you got a lot of people from crypto who are actually not exactly DeFi natives, but they actually understand what's going on. And as it stands right now, I think that their incentives are aligned with DeFi incentives. So that's why I have hope for this. Yeah. Real quick, got a comment. We got some voice showing up. Siege Wolf saying bank regulation is a revolving door like other industries and is effectively controlled by the banks. which means they regulate themselves. Yeah, you're not wrong. That's kind of the way it was set up with the Federal Reserve, which is a lot of the people that work at the Federal Reserve come from the banking industry. And well, when they're done there, odds are they're going right back.
And if anybody would like to see how the bank regulation works, you can switch over to C-SPAN 3, the very obscure channel that nobody would watch. That's where the bank committee typically does a lot of their stuff, and they talk about is on C-SPAN 3.
Yeah, it's the ESPN 8 of government.
Yeah, the most important stuff you want to see, but that's buried down into like where nobody even knows it exists. Yeah, kind of out of sight, out of mind.
Yeah,
but
real quick, got 2 more folks. Moondog coming in here says howdy rowdies, and Centurion 54X says howdy guys. Good to see all you gentlemen. If you guys have any comments or questions, please throw them in the chat. Happy to shout you guys out, answer any questions or musings that you may have, because we're here to talk to you guys. Oh shoot, we got even more people. Chad Notterschwag says hello, fellow base crypto bros. Good to see you, my man. Thanks for stopping by. All right, so Clarity Act as it stands right now, missing tokenization, stablecoin rewards, and some DeFi privacy. Would you call that a win, or is that not?
It's a start. I didn't expect this just to go over easily, and not at all. I mean, this is the line in the sand. Essentially, is what you're starting to see, and sides have been picked. Now there's going to be negotiations back and forth. Now, the high level area that I'm seeing around the tokenization is really that it doesn't address some of the other problems. Like so for some of the examples are like property laws. How does that apply to tokenized collateral, or bankruptcy treatments for tokens? You know, like how does that handle? So it's really more like how would that get processed? Well, it's like everything else gets processed. It would just get worked. It's just really, it's a digital receipt. It's just that you have outdated, this shows you how far behind the policies and technology are across many industries. Tokenization will speed this up and get it more caught up with the digital age on how things move much faster. Think about it, comparing it to, say, doing a wire transfer through Western Union versus I can use a Venmo app. I mean, it's that is what we're talking about, and everything's trackable. That's the thing that the banks want to look. That's the biggest thing I think the banks love is so it's not, I think they're going to push back on tokenization because everything's trackable. That's the key here. Now, I don't want to get into the private networks and public networks. There's things like that that we'd be getting to later, how that's going to be done. But that's the biggest one on there as far as the bigger ones you already talked about. So that's tokenization. That's not really an issue. They just have to work out. I think it's just working out how is this going to work. But unfortunately, you're talking about having to go through many different sectors to figure out how that's all going to work. That would just have to organically grow through a lot of internal industries and the evolution of these industries getting caught up with technology. Like you said, the big one to me is without a doubt is the yield. The banks are like, no, if we give that up, we lose so much power. So I think what's going to happen is if you think about it though, all the banks and all the institutions are coming out with all their own stable coins. This is the thing you've seen this whole year, in 2025, all big push was get as many of these stable coins out there. Everyone's coming out with a stable coin, and I guarantee they're going to try to use the same concept that they're seeing with DeFi and other yielding plays. They're going to try to match that, but that 5% scares the crap out of them, because they can't match that. So they're going to probably look at creative ways on so they're going to try to understand. The industries need to do more deep diving to understand, okay, where does that 5% come from? How are they yielding this? How does that work? And I think they're going to realize that there's an untapped resource there that they could be profitable and still be able to provide high yields. Now, is it going to be at the same? Probably not. But one thing I don't want to see them come out is saying, okay, DeFi is illegal. If you come out with that, if you come out saying DeFi is illegal or anything like that, you're going to see a mass exodus of people around the world going to other places that don't have a problem with DeFi. And the United States is going to lose out. And I think, here in the top of the hour, what you brought up with the Treasury, with Basin coming out talking about it, they realized that big fight that the SEC put on, how they almost completely caused crypto to exit it. So they know they got to get it right. It's going to have to be a give and a take. The banks know that they can't stop this. Same time, they want to try to get their hands in this as much as possible. I think this is just negotiations. Now, how long could this take? Dude, anything tied to the government, it's going to always take 10 times longer than it should. So I wouldn't hold your breath on that they're going to even have a resolution. transition this VenOps and have like parts of the Clarity Act broken up, and they start to go ahead and approve certain ones so they can show some traction, and maybe they table some other items they can talk about later on to come in. I would probably prefer that. Maybe there's just too much in this act, the Clarity Act. Maybe there's just too much, and maybe they need to break it up. I don't know. That's a possibility too.
So the Clarity Act is originally one of 3 crypto bills that were introduced back in May, June of last year. The first one was the Genius Act, aka the stablecoin bill. That one passed pretty much immediately. Since then, we've seen a healthy amount of stablecoin projects be built. In fact, we talked about it last week on the show, which is that we had a surge of about 400% when it comes to people that use stablecoin based credit card services. That industry has grown massively over 2025, and odds are it's going to continue to grow over 2026. The second piece of legislation was the Clarity Act, aka what we're talking about right now. And the third one was the Anti-CBDC or Surveillance Act, which has not been passed. I believe it was passed by the House, has not gone to the Senate. The Clarity Act was passed by the House, now is in markup with the Banking Committee in the Senate. It will go before the committee vote to see if it will go to the floor. And then if it does, it'll go to the floor for a vote. And then if it passes there, to the desk of the presidency. That's a lot of steps. And like you mentioned, we are talking about government, so things take a lot longer than we thought. I was hoping that we'd actually see this thing marked up and voted on last week, but here we are. So as far as the timeline goes, I mean, to quote Charles Hodgkinson, which we saw his clip last week, which is that if it doesn't pass soon, odds are it's not going to be passed this year. And if it's not passed this year, it means that we're looking at an entirely new government come January of 2027 due to midterms. And at that point, if as history, the trends largely show that pretty much after an election for the midterms, the House or the Senate usually flips to the other party, meaning that as it stands right now, the Republican Party is control of the desk of the presidency, the Senate, and the House, meaning that it should be the easiest time ever to pass things through. If one of those flips, well, the president's not is up for debate, but the Senate and the House are. If those things flip, it could immediately bring everything pretty much to a standstill, a grinding halt, if you will. So the best bet for this thing to pass is right now. And it's going to become a question. It's going to become the negotiations of what do you want? How much of it do you want? Do you want it now? Or are you willing to roll the dice and try to pass this later on down the road? So that's really the large questions going on right now. As it stands, if the bill was passed right now, it would be a good start, as you mentioned, but there would be hopefully more to come down the road. It really is what the reason I think it's at least decent to good as it stands right now is that it provides clarity to the crypto industry, which has been looking for clarity for years at this point, so that we don't go back to the days of the Gary Gensler SEC, where anybody and everybody who has a crypto project is just getting sued because whoever is running the executive organizations doesn't like crypto. Right now, we're in a very lucky position, which is that the administration has been fully embracing crypto. That can easily flip. So getting this Clarity Act, which is really just market structure at its core. If you have market structure that gives definition and it gives clarity to people to build projects and really a green light to keep going. Because right now, as it stands, the green light is really executive orders and the people in charge of the agencies saying, yep, you're good. We like you. That kind of stuff. So even without the stablecoin yield, even without tokenization, and even without the DeFi privacy, it's still a win. It's not the win we want, not by a long shot. But at the same time, though, we got to push the football 1 yard at a time. You can't just go for Hail Marys all the time, because otherwise you're just going to kind of hold yourself up through purity testing effectively. So as it stands, look, I'm hopeful.
I still think the tokenization aspect will still go through. I mean, I think the only big one that I see holding up right now is obviously the yield and the DeFi. Those are the two big ones because those are such a threat to the industry right now, which that's the whole reason why it was created, like we said. But if they wanted to hold off on those two, that's fine, but they need how to get pushes through. And the tokenization one's huge. Like that one is going to stymie a lot of innovation. And if the United States is really serious, like they're talking about, keeping up with everybody else, they better do it, because other countries will certainly jump all over that quickly. So
that's true.
Tokenization is just too big.
Those 3 items have oddly like different people that are pro and against each one of those. So obviously the banks are against stablecoin yield. The DeFi crowd is against cutting out DeFi privacy stuff. But then also the third one there, the tokenization and real world asset stuff, That one is kind of the odd one out, which is like, why is anybody mad about this? I thought you were all going this direction. What are you doing?
Well, they are. I mean, that's why you have the treasuries. This is why you have people like Tom Lee that have been grandstanding. He's got a lot of inside information, I'm sure, and they've been talking about it. They've been all of it. So the banks have literally already started tokenizing some of their assets on there. So, like I said, I think that one's more just okay. These uncertainties. Okay, how will this work? How can this work? You're not going to have an answer for it all. You're going to have to go through, and it's going to have to go through it, and it may not apply the same way like it does for each industry. But you have, like, honestly, it's still going to be whatever how it is today. It's still being done the same way. It's just the fact that it doesn't have to go through all this legal paper and so much red tape. It's there. It's going to be so much simplified, but it's going to be a major disruptor. It's going to be a disruptor, and I think that's what they're trying to understand how's it going to work. That one's just, I don't think there's really anybody arguing. I think there's just question marks on that one, more or less.
That's true.
The other two are the line in the sand. You have the diehard cryptos, I'm included. DeFi cannot. It doesn't needs to be treated as such, and that's your property. That is your property. And then the other part of that is, the banks with their yield. So I think those are the two lines of sand, like you said.
True. All righty. I think we beat up that one pretty good. Let's try to tie this full circle and see what we got going on today. All right. As it stands, Bitcoin is currently sitting at $89,000. We had a low a few hours ago, about 87,900 and change. But more importantly, if you want to look from the technical perspective, yes, we're coming up towards the end of a 60-day cycle. There's a possibility that the low could have just happened for the 60-day cycle, and it would have been spot on day 60. The probability of that is a little bit low, I would argue, but as far as when we're dealing in the world of probabilities, it's probably one of the leading probable cases. The reason I say that is that, well, it's there. It's where most of them fall. We have a confirmation of one of them there. But the reason I say there could be other stuff coming down the pike is, well, we did have our high on day 54. Whenever we have a high after day 30, especially well after day 30, like, I don't know, day 54, odds are your cycle is going to run long. And as it stands right now, there are some macro news events that are kind of coming up that could create a new cycle low. Obviously, one of them we just talked about is the Clarity Act bill. That's a big one that could affect the markets. If it gets passed, it could help pump the markets. If it gets shot down, that could harm the market significantly. So that's one of the big question marks. Additionally, yes, our favorite topic. We're coming up to another Federal Reserve Board meeting, the FOMC, where they're going to be looking at interest rates, looking at inflation, and looking at the unemployment claims. As it stands right now, we did get some of our information for January, which is for December because it comes out a month late, remember. But pretty much non-payroll jobs went up about 50,000 to 100,000 jobs, however you want to count for that. As we remember Jerome Powell talking about during the last conference, they kind of believe that they overshoot that by about 80,000, give or take 40,000 either way. So you could be a little bit positive, you could be a little bit negative with that little fluctuation put in there. Unemployment 4.4%, slightly down, but according to Jerome Powell, that's reasonable rates to him. And then also our inflation did come down a little bit. The year over year was 2.7, but a lot of the stuff that was touted over the last month was that the real inflation metric, which is trying to do some cost accounting effectively, claimed it was pretty much 1.7%. So theoretically, you're below that 2% mark, which is the target. So as it stands right now, FedWatch kind of has no change as the predominant probability here. 95% no change, 5% quarter point drop. So based on everything going on, the data coming in, that makes sense. As far as the next round of data, we're going to be getting that in early February. So looking at the 6th for unemployment and the 11th for inflation, I believe. But again, more macro events going on besides just that. Obviously, we have Clarity Act. We have the Davos meeting going on right now. And we have the Fed meeting coming up in about a week here. All these things could likely influence the charts. But beyond the crypto charts, there is some interesting developments going on with the rest of the world. So S&P 500, big gap down today on the open, but still new all-time highs last week pretty much. So the market still kind of ripping. As far as other things, we did have...
Just to add to this, though, keep in mind, like I said, this whole week with Davos, big headlines will be coming out of Davos this week. So you're going to have probably a VIX will probably be jumping all over the place this week.
Yeah. Also, everyone's favorite, gold. New all-time high there. $4,820 for an ounce of gold. Continues to rip towards the upside. Silver. New all-time high again, $93. And let's see.
You got palladium? You got palladium and copper? Copper's been...
Palladium, not quite all-time highs. We had that late December, but still climbing back up there after the big retracement. And overall, chart looks aggressive. Granted, we were much higher back in 22, but as far as a recovery, yeah, I would say that was a full-on trend reversal at the bottom there.
Yeah, everything, all the metals have all been moving up, but gold and silver certainly, because those are the crowded trades. Copper's the one that's one people need to keep their eye on, because that does tie into the ISM number and the manufacturing numbers, which we're all waiting to see to become a little bit more, above the 50 levels, 50 plus, because that'll tell us when things really start to move. But copper's definitely had a parabolic move recently too. Russell, it had a pullback, of course, but look at that. Look at that monster pullback.
What a pullback.
Where's it at? Yeah, look at that monster pullback. This is their highest, riskiest assets on the U.S. stock, on the U.S. markets, and it didn't even flinch on today. So S&P, you could probably strike it up for certain sectors, probably got hit. That's why you saw a pullback in the S&P and maybe on the Dow, but the Russell didn't get flinched. I mean, that's very interesting there. And then the metals, well, the silver and gold in particular, they're just in a perfect environment because of all the uncertainty, and then it's crowded trade and everyone's trending. And like, personally, me, not financial advice, but if I was still holding gold and silver, I'd already rotated out of my plays over the last month. But I'm saying if I was in gold and silver, I'd be rotating those into whatever laggers you think could make the next move that haven't quite moved. The ones that I'm thinking of, like, so everything seems to be ripping, yet here we are looking at crypto. Do something, man.
Yeah, speaking of crypto, though, I do have this for you. This is from our buddy Dace on Twitter from Psychedelic. This is the last time I'll post something like this. Global liquidity is all that matters, and it has not topped. In fact, it only broke out about 9 months ago. During the last 2 cycles in 2017 and 2021, it took Bitcoin 357 days to enter price discovery and 266 days to enter price discovery. And right now we are at day 287 with the global liquidity index making fresh new highs today. During the start of 2022, correction global liquidity had topped after 730 days of expansion and was making lower highs. This is not the same situation, and if you are betting on the bear market, you are betting against global macro liquidity. Bitcoin and crypto are gearing up for a large melt up across the board, and so many will be offsided by the bear trap we have right here. Can't force you to listen to it, so it's up to you. Here's the chart we're looking at. The yellow line at the top, that is global liquidity. And yes, that little horizontal line, that is the breakout from the past all-time high. That happened in March of 2025. Since then, we've only gone up. Crypto has had a choppy time. Specifically, we had the great liquidation event there where we had $19 billion liquidated in effectively 24 hours. And then since then, lost some footing back when the U.S. and China tariff talks were back up again. And back when people were talking about, oh, we might be able to force Michael Saylor to sell if we drive his stock price low enough. Well, that didn't happen. So looks like a bit of a trend reversal at the bottom there with Bitcoin. I happen to believe so, but that's what we're looking at. So again, I know we talk about this almost every week. Is the 4-year cycle dead, or are there other things going on? This, again, could be a very impactful week or two, depending on what goes on. If the Clarity Act bombs and data or Jerome Powell come out very bearish, they could drive the market down and possibly even start to reaffirm the case that the 4-year cycle top is in. However, if that's not the case, market goes up, Clarity Act passes, Jerome Powell continues to ease interest rates or is very dovish about the state of the economy, well, global liquidity and all the other stuff we're talking about, like manufacturers index, M2 supply, all that kind of stuff could be the prevailing theory. So I know it's a little bit boring to pay attention to all the macro news stuff. It's not the hot, sexy crypto news and seeing all your favorite tokens pumped to the moon. But realistically, if we're looking at the overall markets, and I said it earlier in the show, I do believe that everything is tied together at this point. This is an international marketplace that is tied together by the internet, by the ability to have Amazon deliver stuff to you within 2 hours or the average 2 day for Prime. all that kind of stuff leads me to believe that this stuff is tied together. So that's why the question is still up in the air. Is the 4-year cycle dead? Yes or no? Are we going to see a extended cycle? Yes or no? Are we going to see a creation of a whole new cycle, maybe a 6-year, 8-year cycle, or just a creation of new trends altogether, which is that crypto kind of goes up and to the right, largely the large cap tokens in particular, that kind of stuff. So, Tracker, am I missing anything here?
No, you're not missing anything. I just like to reiterate, because we keep pounding the table on this one. With tokenization, first of all, tokenization is going to go through. They're already doing it. It's just they're working out some semantics or the details, we'll say. So Ethereum and people like Tom Lee, like him or hate him as far as his bullish stance, but he is trying to do something that the markets are trying to figure out. They actually have taken a good approach on how to price Ethereum or other cryptos that based on the cost of assets that are on their networks.
Lost you for a
they've
second.
already looked the fair market value for Ethereum based on where we are currently today. Total value locked on Ethereum right now has a fair market value at $4,000 to $5,000 for Ethereum. Yet Ethereum's at a discount right now. Okay. If the RWAs get passed, yeah, exactly. If the RWAs get passed, right? And that's just the tokenization. That's basically, tokenized real world assets is what the RWAs are. If we're talking about getting some of those start happening this year, expansions forecasting between $7,000 and $9,000. That's where you're starting to get more equities, more assets locked up in tokenization on the Ethereum network. This applies to any other network. So what I'm saying right now is, personally for me, would I be selling at these levels? Absolutely not. And honestly, the 4-year cycles, we've gone into this many, many times. There's a lot of history to suggest and show. And if you didn't see it, Tom Lee brought up a lot of good in the presentation at the Binance. What was the big meeting that they had with the Binance investors or something like that? I remember it happened. It was about 2 months ago. We dove into it, and it was a great power.
In Abu Dhabi.
Yes, it was. I'd recommend anybody going out there and seeing it. I think we've posted it on here many times. We broke it down. Go in there and watch that presentation. It was really well done, and it showed everything we're talking about. But it also goes into now trying to fix the same problem they did with the .com bubble. Anytime you have new technology, they're trying to figure out, how the heck do I value this darn thing? Well, that's what they're starting to figure out. And that's why you're seeing these treasuries come into light, because they see this. They've already tried to figure it out. People like Kathy Woods from ARK Investment, and of course, Tom Lee and others they invest in disruptive technologies. That's what they mainly focus their attention on. That's why they're so into this. But RWAs, and bottom line, what I'm trying to get at here is, I'm personally not selling now because I can see what's coming. I am not going to be dumping now anytime soon. I mean, to me, I'm loading up for long-term for some positions, much longer term. Are there trades on? Sure, you can do trades. Absolutely. But the long-term here is, you're going to see something. And I think you're also seeing it too. Like, it's getting frustrating. Some can make the argument that market players are suppressing the prices right now to just, get everybody to shake out. Right now is a perfect time to do that. If you could suppress these prices, I'm not saying it's necessarily happening, but the flash crash we had in October certainly was suspect, and a lot of data to back it. But if they're suppressing the prices right now, while all these other things that are going up, people might be dumping crypto and rotating that are running. They would love to see that, because who's been buying all this? Every time we've been selling, the institutions keep buying. Heck, now you got the U.S. government adding to their seized amounts that they're going to be holding. I'm just throwing that in there aside. But what I'm saying is, all the big players seem to be holding. But yes, there's some people that are trimming the long-term positions that they've had for 10 years or 8 years, 7 years. That's understandable. You want to take some wins. I get it. But the big institutions are accumulating. They're not selling. The retailers keep selling. And we keep showing on-chain data week after week that keeps proving that theory. So I'm just saying this. Does it suck right now because you've seen other stuff ripping? It does suck. But at the same time, you got to play the long game here. And unfortunately, one thing I will share with you, I've shared a few times here on the show, that I was invested in a lot of good disruptive technologies back in the day, and I dumped early. I had Facebook. On the pullback. I had it under $20. I'm talking about before it had dividend cuts. I was in Google when it first went IPO'd. I had a lot of stocks when they first went IPO'd. I sold, made really nice gains, but man, I could have made out like a bandit if I held all these. The graphic
Yeah.
card companies with NVIDIA, I had some of those, but I had a lot of stuff that really came to fruition. Don't be quick to give up, because a lot of the stuff we talk about, we're at the tip of the spear when it comes to this stuff. It takes a lot of people to kind of catch up. So the nice thing is you're positioning it, but unfortunately, sometimes when you're first to the party, you got to feel some pain and a lot of disruption because you're so early. Just be careful. Have your long-term investments locked in, have your midterm and your short terms locked up. Don't start blending them together. That's all I'll say. Not
That's true.
financial advice.
Yeah. Siege Wolf coming in here. He says the worst habit of best traders is selling too early. Yes, sir. There's a lot of good books out there. Market Wizards is one in particular that we covered over at Book Club for DJ Roundtable. A lot of the guys there talk about A, just trying to manage your emotions, but B, it's kind of like a weird backwards thing, which is like, if you have something that drops, you kind of like don't want to accept that you're wrong and just hope that it recovers. But realistically, those are the ones that you should cut. And conversely, when you have winners, you kind of get the opposite of like money burning a hole in your pocket of, I need to capture these gains, otherwise I'm going to lose them. When realistically, those are the ones that you really kind of just need to let go, because if they continue to keep going, it's going to be a lot bigger outsized returns as well, that kind of stuff. But before we close the show here, I wanted to give a quick shout out to CoinGlass. They had an update, so they merged all of their ETF tabs into one, and we actually get a really nice looking chart here, seeing what's going on. Outflows, nothing too crazy. I mean, is it outflow? Yeah, but at the same time, we've been kind of bouncing back and forth for a while there. Crypto ETF assets under management. Ooh, okay. I like this chart as well. We can see it's starting to level off here, but guess what? This largely follows the price chart pretty much. So is it that the assets are going out, or is it that they're being depreciated based on the market price of Bitcoin on that day? I would argue that one.
Yeah,
personally.
October 7th was the top. October 7th was that right before we had the
Oh, look at that. October 7th. Wow. Yeah, pretty much. But as far as what's going on with the markets, look, 60-day cycle, I think, is probably the predominant narrative right now going on. We have macro events lined up for it, but at the same time, like, it's just the cycles, how they work. It's human psychology, it's market forces, it's all that stuff put together. So did we have a very nice week where we went all the way up to $98,000? Yes. We even bounced off the 20-day moving average, which is our short-term moving average, showing that we were going that direction. Fantastic. Since then, did break down below the 20 and the 50-day moving average, but we haven't spent very much time there at all. In fact, we broke down between both those averages in the last 24 hours alone. So with that being said, if it truly is a cycle low, there's a decent chance for recovery to get back above that and possibly start the new cycle going towards the upside. Outside of that, though, RSI. We had a really good RSI. We were building in the sentiment. This is the relative strength index. We were building up pretty good. Almost got to that overbought territory where if you can spend a good amount of time there, you can really see outsized gains, and you can see stuff like what happened previously, like here off of our recovery, and then also when we made our new all-time highs back in November, that kind of stuff. This area right here, this is what we're looking for spending a good amount of time there to see those runs really happen. I would like to see RSI continue to get a little higher, but the good news is that we actually didn't break down below the RSI from earlier mid-cycle, meaning that overall the relative strength is higher than where it was when we were only just a couple $1,000s lower on the Bitcoin price. Excellent. Alrighty, fear and greed. This one tells a little bit of a different story. Highest fear and greed we had was the 15th. That's when we made it up to $98,000, got all the way up to 61. That's not very high. Is it in the greed section? Yes, it is. But then we broke down to 50, which was about even, and now we're sitting back at 24, which is very low. The fear and greed index is more of a market sentiment as opposed to relative strength, which is the other one that we covered there. So getting slightly conflicting stories there, which is that people are very fearful, but the overall strength is not as bad as the fear is. Outside of that, I mean,
go back to the VIX real quick. Let me see. I just want to look at your time frame you were showing.
VIX or fear and greed?
Fear and greed.
This is.
I'm sorry, not fear and great. I'm sorry, the VIX. I'm sorry. I thought you were looking at the VIX. I apologize.
Oh no. Fear and greed is a 3-month time frame.
Yeah, there's nothing here. There's no big spikes that I'm seeing.
Yeah. As far as the technicals go, though, getting up to $98,000 in Bitcoin, big move, because we broke through that 94,000 barrier that looked like it was holding us down for a bit. Got all the way up to this lower area where we stopped off on the way down back in early November. breaking through that is going to be the next step. Although honestly, making a recovery is step one before getting back up to $98,000, which is right around that 100K, which is big psychological level. But yeah, there's a lot of stuff that has me hopeful. At the same time, though, this structure is also why I say this is a big week, because if things go poorly and we see a big drop even below our cycle low here of $79,000, that could be used as an argument for 4-year cycle theory coming to fruition. But at the same time, though, I think that would take a lot of effort, a lot of energy, a lot more fear, considering we have had a ton over the last 3 months. I don't know how much more you can really give the market. Alrighty. Either way,
hold your breath on that one.
Yeah, true. I mean, I was the guy in for our Q4 podcast saying that 150K was in the cards possibly, and I was hoping for it, but here I am. Look, I made the prediction so that you can call me a charlatan. Don't want to be the guy that says, "Oh, it could go up, it could go down." We don't know. I was making the best educated guess based on the information I had at the time, which happened before the liquidation event, by the way. So I still stand by the idea that things were sound at the time until they suddenly didn't become sound. But regardless.
Well, there were some shenanigans that happened in October that caused that. Let's be fair here. I mean, there was a lot of shady stuff that happened on Binance and a couple of central exchanges. There were some really timed trades that went through right before announcements. I mean, there's a whole insider thing there. The evidence is right in front of you that something definitely happened. So
that's true.
You can't sit there and say, well, it was just a coincidence. No, it's not a coincidence. Trust me. There's enough evidence there to show there's insider trading.
Either way, if you want to yell at me about failed predictions, or you want to learn more about building strategies like Tracker talked about for what's going on in the markets and trying to hedge your bets or set yourself up for a good spot, head on over to our website, walktheblockndf.com. There you can find the membership tab. If you go to that tab, you can get into our private Telegram, where inside of there you can find all the exclusive content we have and the live ongoing chat of all of our excellent members over there. Been posting a lot of good news articles, had some good conversation going on lately as well. And we even have some exclusive live streams coming up in there. So if you want to get in there, you got to go to the website, sign up. But we like to say that the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. When we all work together, we can all win together, baby. So that is what we have for you the show tonight. Tracker, any final thoughts before we get out of here?
Just wanted to share the 5 key things. I want everybody to, if you can, try to follow what's going on in Davos. I can't stress that enough. Anybody who's involved in it, it's such a powerful entity and negotiations and things that come out of there. That's where a lot of theories come out. A lot of interesting stuff comes out of there. You do need to pay close attention. The 5 theme areas that they're focusing on is how can we cooperate in a more contested world? How can we unlock new sources of growth? How can we better invest in people? How can we deploy innovation at scale and responsibly, mainly focusing around AI? How can we build prosperity within planetary boundaries? So what I'm saying here is these are the 5 main areas that they're focusing on the themes. So these are where you're going to hear a lot of big, this is where you get to see it, kind of pull the curtain back and see what these guys are thinking. The WEF, Club of Rome, the big banking institutions, global world leaders. I mean, this is the stuff you want to pay attention, because this starts to build narratives that will potentially feed into how corporations are going to run, how governments may run. It's just something, if you want to know what's potentially coming and what they're looking at, this is where you want to look at it. Outside of that, hold your ground, do stuff. I am certainly not getting flinched by any of this stuff going on right now. I still feel I'm still holding long term. I still see all the cards, everything laid out where we're going. This is a long-term game. This is not like short-term. Yes, there are tradable options, but right now, anything from the altcoin sector or anything like that, there's really just pockets here and there of action that might be happening. But ultimately, we're hostage until the ISM number, things like that, start to turn around. The fact that copper's been starting to really rip is a really good sign. The fact that, the chart you showed, Zenith, as far as, the amount of global liquidity that's out there, that's a great big sign. So you're seeing these things starting to come to fruition. The Russell 2000 holding very strong on a day that kind of things pulled back is very strong. And the fact you're seeing gold and silver and these kind of metals running, think about this. Where are those gains going to get rotated into on those crowded trades? I'm not saying it's necessarily going to go all into crypto, but what I'm saying is they're going to take profits rotate in, especially if risk on assets still keep happening. And keep in mind, in May, the new chair is going to take over for Jerome Powell. Okay, keep your eyes on that because right now they're only predicting 2 rate cuts this year. 2. I'm going to bet right now we're going to get more than 2 this year. I'm going to tell you right now, and I will absolutely tell you we're going to get more than 2 rate cuts this year. It's going to happen. It's going to catch the markets. That'll be a potential surprise to the upside. That'll be another fuel to add to the accounts for risk on assets. I just think right now crypto is just not in, people aren't in love with it right now, but a lot of times I like to, there's a term where you always want to hang out with the ugly girl at the dance because it ends up being the pretty girl at the dance when it's all said and done. So just keep that in mind. And that goes 2 ways. If you're the girl, you want to pick the ugly guy at the dance too. Hey, it's all good. It's just it's a very simple analogy, but that's how it is. Nobody wants it right now. That's the best time to own it. So keep that in mind and hold your ground. We'll be here next Monday as well. Just keep following us, keep chatting. We're constantly monitoring, seeing so much stuff. So trying to help to connect the dots for you guys as we keep going forward.
Yes, sir. Well said. Big stuff at Davos. I'm not surprised AI is big talk of the town. And there's some of those questions were like, how do we invest in human capital? It's like, you haven't been doing that with AI lately, so you might want to get back on that. But
well, to just talk about that, how can we invest in people? Here's the focus: human side of change, building resilient workforces, skilled transitions, well-being, and addressing inequality in industries and technologies evolve, while industries evolve. So what they're saying here is, with the technology, how do industries, basically profit off people and utilizing these new tasks? So I'll read between the lines. How can we leverage AI and all these new tools to make our workforce more productive? That's essentially what they're going to be looking at.
It's true. Well, look, I'm just a dirty project manager, so AI could easily be coming for my job, but I don't know if it's ever been a better time to be in a trade. So, yeah. Alrighty, that's going to do it for us this week, folks. We're going to keep an eye out for what's going on with the Clarity Act and all of the negotiations going on with that. Additionally, keeping an eye on Davos and, more importantly, the markets. Big weeks coming up. Try to stay tuned in if you can. Don't get caught with your pants down, so to speak, but that's pretty much all we got for you tonight. Ladies and gentlemen, thank you so much for tuning in. We'll catch you guys next Monday, 8 p.m. Eastern time for our stream. As always, and to all of our guys in the chat, we'll see you over there. Ladies and gentlemen, thank you so much. My name is Zenith. This is Tracker. But more importantly, thanks for watching Walk the Block. Hope you all have an excellent evening and good night.